The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Jeremy, Thursday, 23rd of May. A bit of news this week, to say the least. How are you feeling about things?
Yeah, it has been a busy week.
Yeah.
On the macro front, we began with investors, I think, holding their breath about the circumstances of the Iranian helicopter crash involving their president.
Yeah.
And it prompted another strong start to the week for things like precious metals, and Bitcoin rallied hard to an all-time high. And the pound in all that remained pretty firm, despite hopes at the beginning of the week, at least, of an early rate cut.
Yeah.
But of course,
everything changed. Yeah.
And everything changed. Well, of course, yeah, it feels like it. I mean, the big economic news this week is that the UK annual inflation rate for April came in slightly higher than expected, albeit at 2.3% year on year, closer to the magic 2% than most other developed economies. So sort of a pat on the back, but the odds for a UK rate cut in June lengthened from 50% to 15%, and the pound unsurprisingly moved higher.
So good inflation news, but not quite as good as expected.
Yeah, and the month-on-month core inflation rate came in much higher than expected at 0.9% versus 0.6% last time, reflecting a higher level of underlying services inflation. So energy and food is coming down, but wages and services, well, they're going up.
Yeah, that's true. Although I did think overall the media was trying to be upbeat. Is that a fair summary?
Yeah, I think overall there's been a shift. I wouldn't say being long the UK has become a crowded trade, but it's become people's baseline that they've accepted that the UK has proven to be more resilient, and that combined with lowly valued assets is an attractive combination.
Yeah.
But of course, the big political news this week in the UK was that we're going to get an election on July 4th. That's obviously got everyone chattering. And the polls and all the commentary indicate that Rishi has no chance of retaining power. And the debate really is over how large a majority, if they do indeed secure a majority, the Labour Party secures. And there's a lot of chat around why did he go early? My view on that is that in terms of where we are as an economy, we're not in a bad place compared to our recent history. Actually, Sunak has presided over an improvement on what he inherited. But the reality is people are miserable. They want change. I think in the light of things like the post office scandal, the blood scandal, people want change. And people's memories of the last 14 years mean that we're going to get a change.
Yeah, it doesn't feel like any of those positive things are going to be enough to save the Conservatives, does it?
No, and I think being a little bit more cynical, if Sunak thought that things were going to get better, he would have waited.
Yeah.
And I think going to the polls early suggests he possibly expects them to get worse, either politically or economically or both.
Yeah.
You know, the guy was a hedge fund manager. So he's making these calculations and then making a decision. So maybe he just was so fed up with the whole thing, he just wanted to get it out of the way so he could go on holiday and forget about it. I don't know, but I wouldn't blame him.
Quite possible. But you've been saying for some time that the UK stands out against a number of other global markets in terms of our relatively low political risk, or the low risk of the political changes that we're likely to see having a major effect on markets. And it seems that that's been borne out this week. The markets hardly reacted.
From a perspective of an international investor, it's going to become apparent earlier that they can now see firsthand how relatively civilized and sensible our politics is compared to other versions of democracy that are on offer, and versus how we conducted ourselves in the recent past. But I think all that is in the past. And as I said before, the UK's relationship with Europe will not be on the top agenda items for the political discussions that are going to take place over the next 6 weeks.
Yeah.
And, you know, our governance will be shown to be as such that we can change government party in a relatively smooth way. And obviously, we've got our own views about the relative merits of Jeremy Hunt or Rachel Reeves. But as an international investor, I think it makes very little difference.
Yeah. So, okay, lots to keep an eye on. And as you say, lots of chatter kicked off already in terms of the election. Anything else major going on outside of the UK markets?
The other big thing from the States, we had Nvidia results, which beat expectations again. Shares rose 6% after hours. That's one HSBC in terms of market value. Yeah, the revenue for the 3 months to end of April was 26 billion versus consensus estimates of just below 25 billion. But that's annualized revenue growth of over 260% for the second quarter in a row. So, this is a giant that is sprinting.
Just carries on. Yeah.
Yeah.
Amazing.
The other thing we had from the States was FOMC minutes, which were published for the last meeting, which suggested that interest rates might remain stickier than previously thought. Not surprisingly, on the back of that, the dollar strengthened a bit, and some of the commodities that have been flying high subsequently weakened. So, I think we could have a long summer of higher for longer coming out of US markets.
Yeah. And combined with the UK's inflation print earlier in the week as well, that's not a great set of data, is it?
Absolutely. And the only other thing to mention is probably that Japan's 10-year government bond yield topped 1% on Wednesday for the first time in over a decade.
Goodness me.
Yeah. So this happened without any renewed significant pressure on the dollar-yen rate. But that rate has now moved up a band and does now seem to be in the sort of 155, 160 level. And I think this latent fear that's been reoccurring in the back of my mind, if not other people's minds anyway, of a sort of an Asian currency crisis, that remains on the boil because Japan must continue to inch towards higher rates. And that has consequences for everybody.
Yeah, it might not just be Asia. That could spill into the States as well.
Oh, sure.
That was the concern, wasn't it? Yeah.
Yeah.
But let's hope it remains latent for a bit longer and we can get our UK recovery properly underway before that starts to bite. So, yeah.
Well, I think that's an important point. Whether it's the slowdown in the US economy or some form of financial crisis emanating from Asia or elsewhere, I don't want to get too bullish about the UK, but those sort of macro factors, I think the main risk points to the continued UK recovery from a stock market perspective.
Yeah, no, that makes sense. And talking of that UK recovery, a number of people have been placing bets on UK stocks recovering and being prepared to bet significant amounts of capital and take them off the UK market. There's been a few of those announced this week, haven't there?
Well, I think the UK stock market is now under siege. So this week we've had news of European PE house EQT, the guys who bought DECRA last year, are in advanced discussions to buy Keywords for something approaching £2 billion. We also had an announcement from a US company called Advanced Energy Industries that say they've been trying to buy XP Power and they've been rejected by the board. So they decided to go public. Then they've been trying to buy this asset for a number of months now. And they're prepared to pay a healthy premium, which would value XP Power at £570 million.
And that was announced by the bidder rather than by XP Power itself. Right.
And I think this is an interesting dynamic. These bids and approaches are being made to management teams who are not acting transparently and letting the market know that these things are going on. And I think in the case of XP Power, quite a few things have gone on since this company, Advanced Energy, first made its unsolicited approach to the XP Power board, including a fundraise, which took place at a discount to the prevailing share price, substantially below a level that an external provider of capital would be prepared to value the company at. So I think there's some interesting issues being raised, and the dynamics of the process by which private equity or strategic buyers of UK assets, it's not one-way traffic anymore.
No.
UK fund managers are no longer seeing the rush of redemptions. They've got cash and there are fewer opportunities to buy quality companies. So I think you will see greater resistance from the investment community to just roll over and play dead when these bidders come along. Yeah. But I think the issue is that it's not so much barbarians at the gate these days, but it's barbarians in the boardrooms.
Yeah, absolutely.
And we'll come on and talk about what's going on in the FTSE 100, but we're probably only seeing the tip of the iceberg here in terms of companies revealing that they've run a process. I mean, we had a couple of weeks ago, KKR winning a process to buy IQGeo without any of the shareholders being aware there was a process going on. I think there's going to be a bit of a fight back here, a bit of a reaction. We've heard that private equity have approached Hargreaves Lansdowne, who rejected an offer which looks a little bit opportunistic, I'd have to say, but would value Hargreaves Lansdowne at £5 billion. And further up the tree in the FTSE 100, Anglo American is now in discussions with BHP to try and reach some form of agreement on how they can move that forward. So all of a sudden, I think the UK, we're on bid alert.
Yeah.
These are only the ones that have come to light. I would imagine we're only seeing a fraction, maybe a third or a quarter of the actual number of discussions that have gone on or maybe going on as we speak.
Yeah, and it's a fair point to make that UK fund managers or investors generally might well be prepared to back the management teams and fend off these bids, especially opportunistic ones, and be prepared to back these stocks to go higher and grow and perform over time. But you'd think they would like to be informed about the options that are out there and make an informed choice or help work with management to decide what's the best route forward. And they can't do that if they don't know.
Absolutely. It's an issue that I think we're going to hear more about in the next few weeks and months. But for people who are turning down these approaches as opportunistic, the clock then ticks.
Yeah.
There's a bar there they've got to jump over.
Correct. And traditionally, in years gone by, that would have been a formal sort of bid defence document and a strategic plan and some kind of great opportunity in the years ahead, which management team would need to deliver against. And I think that can still be right.
Yeah.
But as you say, it's a tricky one. If these bids are being rejected in private, it's not really as transparent as perhaps it should be. So yeah, as you say, interesting to see how those all pan out. Okay, that's great. And in terms of other UK quoted news, we had quite a few bits and pieces from some of the progressive clients. We had SDI, Forterra, Gamma, Watkin Jones and IDOX all updating or providing market with a bit of detail on current performance. And generally, it was a pretty good crop. They've all been performing pretty much in line with or ahead of expectations. Forterra still slightly battling market conditions, but as Alistair Stewart's highlighted a number of times over recent weeks, there are strong signs of an impending recovery. The house builders have stopped selling land.
Yeah.
And there are signs of some things beginning to pick up already. So Forterra could start to see the benefit of that relatively soon. And it's nice to see a number of positive updates there. So some positive progress being seen across that group. Anything dramatic coming up next week on the broader calendar?
Well, before we get into next week, tomorrow we get UK retail sales numbers, which I think could be slightly uncomfortable reading for Sunak and Hunt as they're out on the election stump. The expectation is we're likely to see a decline below last month's flat number, i.e. a negative number. We're also tomorrow going to get US durable goods orders, which are again likely to show quite a sharp fall from the previous month, very strong figure. There could be some interesting takeaways from those. Next week proper is pretty quiet. It's a short week in the UK and it's a pretty quiet one. Thursday, we get quarter-on-quarter US GDP data, which is expected to show a slowdown from the Q1 figure of 3.4%, which was pretty knockout, to something more like 1.5%. So I think the market could be sensitive to a figure that's much lower than that. And I think there's quite a lot of people watching for signs of a slowdown in the US economy right now. And Friday next week, we get inflation data for the Eurozone, which I'm afraid, again, along with the US core PCE data for April, which is going to be released on Friday as well, I think both cases pretty much an unchanged figure, around 2.5% annualized rate, pretty unchanged month on month. So nothing there, I think, for people who are looking for something on rates earlier.
Yeah.
I think this higher for longer theme could run and run over the summer months.
Which could perhaps explain why Rishi was keen to move when he did. So,
I think so. Yeah.
Okay. Good. Well, hopefully next week is a bit calmer because this week's been something of a blockbuster in terms of news and excitement. So yeah, let's look forward to a good bank holiday weekend for all our listeners. Yeah. And we'll catch up with both you and them next week.
Okay.
Thanks a lot.
Cheers.
Brought to you by Progressive Equity.